Hi, Kristen Cooper here. Today we're going to talk about credit. Now, the reason that I wanted to start this channel with credit is that I really think that this is the basis, the foundation upon everything building. Now, oftentimes people will go to college and that's where you really are starting to advance in your adulthood, and that's when you start get offered credit cards and you don't understand them. And that's typical because we're not taught that in school. Now, you go to a college campus and they say, hey, you can get this free credit card, and you think, wow, I could really use the money, I can use it for this and that, but you don't understand the liability and what that really means. And so oftentimes we get into a situation where we take out credit and we have some lates and we don't really think that it's that big of a deal. And then all of a sudden we're in this position where our credit scores are low, and our ability to get loans or secure, rental housing or a loan or things like that becomes affected. And it all started because we didn't have the proper education. Now, I don't care what age you are. I have been in the mortgage industry since 2004, almost 15 years now, and the age doesn't matter. I have people come in that are brand new to credit that don't understand it, and I have people that are in their 50s and 60s still battling trying to understand credit. So although it seems like it's a simplified topic, there is a lot when it comes to credit, and I want to be able to pass on that information to you. So as we talk about credit, we're going to talk about what is a good credit score. We're going to talk about credit profile, and there's going to be many videos. This is our video series that we're starting, which is under credit. Today we're going to talk about what is a good credit score. And so we really want to kind of define what that looks like. And the reason why is credit can be defined in so many different ways depending on what you're trying to do. And what I mean by that is you can go to a car dealership and have your credit pulled, and they'll give you one score. You could do credit monitoring and you can have a different score. You can go to a mortgage company and have a different score. Every type of creditor is going to look at your credit and they're going to rate your credit differently. So you can notice that your credit scores can be different, which can be very frustrating depending on what your long-term goals are. And so we really want to break down what does that look like. Ideally, you want to look for a credit score in the mid 700s is considered good credit. And then different factors make up that credit score, whether it's going to be in the good range, fair range, bad range. And we're going to talk about those in other video series. But you want to shoot for the mid 700 ranges to be considered good credit risk. Now, that is what credit is. Credit is a definition of a way to categorize and see what is the ability to repay the loan. That's really what everyone's looking at, is based on your credit history and how you've maintained credit, how you've built credit, how you've paid back credit, how you use credit, what is your likelihood of ability to be able to repay this loan? Now, that's where they come up with the risk factor. The higher the credit score, the lower the risk. The lower the credit score, the higher the risk. And so the higher the risk that you are, the more that's going to impact either you being approved for something or the rates and terms in which you get if you are approved. And so everything comes back to credit. And now our whole goal in life when it comes to finances and living in a abundant world is going to be in a definition and a foundation starting from credit. And so we really need to get our heads wrapped around what that looks like and what we can do to repair our credit scores. Now, depending on the type of loan that you get or what your reasoning is for credit, you can go to an apartment complex and put in a credit application. They're going to look at it and see, okay, do I believe that this person's going to pay their rent? Or you can go to get student loans and they can look at it and say, do we believe that you're going to be able to pay this back? Now, the more that they believe that it's going to be harder for you to pay it back, whether that be in income that you have, your ability to be able to repay your debts, how much debt you have, all these factors that you have is going to determine the terms that you get for that loan. Now, if you can come in with a perfect credit score and get a 4% interest rate and better terms versus you coming in with bad credit and getting, let's say, a 6, 7, 8%, depending on what type of loan that you're looking at, that difference between is how much you're losing out of your net worth. So it's super imperative that we get back to the basics of understanding credit, get you in a good position to where you have a solid credit score to give you the best leverage and the best advantage to getting the best terms and approval long term. So stay tuned for all these series. I want you to go through and watch the videos. You may think, oh, I already understand that. I already know it. I encourage you to watch them. There's a lot of information that comes up. And even if you just get one takeaway, one thing that you can change, improve, and build upon, you're really going to have the advantage moving forward long term to building your net worth, to building your financial portfolio, and leaving a legacy for your family. This is Kristen Cooper, and I look forward to our next video.